Hello guys, welcome back to my YouTube channel. Tejaswini Shiv Kumar. So today I have taken financial management subject. Today I am going to teach you how to calculate earning before interest and tax and earning per share. Now let's read the question. RG Limited is capitalized with rupees 10 lakh divided into 1 lakh equity shares of rupees 10 each. The RJ Limited has already capitalized 10 lakh capital divided into 1 lakh equity shares. Then the management decides to raise another 10 lakh to finance a major program. There are four possible financial plans. Then the company decided to raise another 10 lakh. Therefore, you need to choose which plan is suitable to raise these shares. There they have given four plans, that is plan 1 all equity shares, plan 2 all debentures carrying 8% interest rate, plan 3 5 lakh equity shares and 5 lakh in debentures carrying 10% interest, 5 lakh equity shares and remaining 10 lakh in preference shares at 10% dividend. You are required to calculate EPS and suggest which plan is better. The company EBIT is rupees 6 lakh and tax rate is 50%. So now let's solve this problem. Calculation of EBIT and EPS analysis. The format is particulars plan 1, plan 2, plan 3 and plan 4. You need to take columns. How many plans is there, that much you need to take. First you need to write EBIT, earning before interest and tax. They have given in the question that the company EBIT is rupees 6 lakh. Therefore, you will write 6 lakh in all the columns minus interest on debentures. In the plan 1, they have given all equity shares. Therefore, there is no dividend. Debentures nil. In plan 2, they have given all debentures carrying 8% interest rate. Therefore, you need to take all the debentures. They have given debentures of 10 lakh. For 10 lakh, you need to calculate 8%. 10 lakh into 8%. You will get 80,000. In the plan 3, they have given 5 lakh equity shares and 5 lakh in debentures carrying 10% interest rate. They have given 5 lakh debentures. Therefore, for that you need to take 10% interest rate. 5 lakh into sorry into 10%, 50,000. You will write in the plan 3. In plan 4, they have given 5 lakh equity shares and remaining 5 lakh in preference shares at 10% dividend. In this plan 4, they have not given debentures, therefore you need to write nil. Now by deducting interest on debentures from EBIT, you will get EBT, that is earning before tax. 6 lakh minus 0, 6 lakh only. 6 lakh minus 80,000, you will get 5 lakh 20,000 in the plan 2. 6 lakh minus 50,000 is 5 lakh 50,000 in the plan 3. 6 lakh minus 0 is 6 lakh only. This is earning before tax. Now you need to deduct tax from EBT. In the question they have given the tax rate is 50%. Therefore you will calculate 50% for all EBT. 6 lakh into 50%, that is 3 lakh. You will write tax is 3 lakh. 5 lakh 20,000, you can take into 50% or divided by 2. You will get same answer, 2 lakh 60,000. You will write in the plan 2. 5 lakh 50,000 divided by 2. You will get 2 lakh 75,000. 6 lakh divided by 2, you will get 3 lakh. This is tax. By deducting tax from EBT, you will get EAT, that is earnings after tax. 6 lakh minus 3 lakh, you will get 3 lakh. 5 lakh 20,000 minus 2 lakh 60,000, you will get 2 lakh 60,000. 5 lakh 50,000 minus 2 lakh 75,000, you will get 2 lakh 75,000. 6 lakh minus 3 lakh is 3 lakh only. Now you need to deduct preference dividend from earnings after tax. In the plan 1 there is no preference dividend, therefore nil. In plan 2 also they have not given preference dividend, nil. In the plan 3 also there is no preference dividend, therefore nil. In the plan 4 they have given 5 lakh equity shares and remaining 5 lakh in preference shares at 10% dividend. They have given 10% dividend. For that 5 lakh preference shares, you need to take 5 lakh 5 lakh into 10%, you will get 50,000. Therefore you need to deduct all this from earnings after tax. 3 lakh minus nil, 3 lakh only, 2 lakh 60,000. You will directly write in the plan 2. Plan 3, 2 lakh 75,000. In the plan 4, 3 lakh minus 50,000. You will get 2 lakh 50,000. Now this is the profit for equity shareholders or profit available for equity shareholders. For the EPS calculation, you need to do profit divided by number of equity shares. You have already calculated profit, you will directly write 3 lakh. Number of equity shares. In the plan 1, they have given all equity shares. The company wants to raise 10 lakh equity share capital. For the calculation of equity shares, you need to do equity capital divided by number of face value. Equity share capital divided by face value. Equity share capital is 10 lakh. 10 lakh divided by, they have given face value is 10. You will get 1 lakh. 1 lakh is the equity shares. In the plan 2, there is no equity shares. In the plan 3, you have 5 lakh equity shares, 10% interest. Therefore, for 5 lakh into 10%, you will get 50,000. In the plan 4, they have given 5 lakh equity shares and preference shares. You need to take only equity shares. 5 lakh into 10%, you will get 50,000. 50,000 plus 50,000, you will get 1 lakh. 1 lakh plus 1 lakh, 2 lakh. 2 lakh is the number of equity shares in the plan 1. Okay. 3 lakh minus divided by 2 lakh, you will get rupees 1.5. This is earning per share of the plan 1. Let's go to plan 2. Profit is 2 lakh 60,000. In the plan 2, there is no equity shares. So the first equity shares is 1 lakh. You have already calculated that. 10 lakh divided by 10, you will get 1 lakh. You will directly write that equity shares 2 lakh 60,000 divided by 1 lakh. You will get rupees 2.6. This is the earning per share of the plan 2. In the plan 3, there is equity shares 5 lakh. You have already has 1 lakh equity shares. 1 lakh plus for 5 lakh, you need to take 10% interest rate. 5 lakh into 10%, you will get 50,000. 50,000 plus previous shares 1 lakh. You will get 1 lakh 50,000. Profit is 2 lakh 75,000 divided by 1 lakh 50,000. You will get rupees 1.83. This is the earning per share of plan 3. Now let's go to plan 4. You have already known that 1 lakh equity shares you have already has. In the plan 4, they have issuing 5 lakh equity shares of 10%. For 5 lakh, 10% means 50,000. In the previous, you have 1 lakh. 1 lakh plus 50,000, you will get 1 lakh 50,000. You need to divide it from the profit. 2 lakh 50,000 divided by 1 lakh 50,000, you will get rupees 1.6. This is the earning per share of the plan 4. You need to write rupees for earning per share. Now you need to check which plan will give more returns. That is, plan 2 has rupees 2.6. Now you need to write a narration that in this company going to choose plan 2 for financing because it gives more earnings to equity, that is rupees 2.6 compared to plan 1, plan 3 and plan 4. This is the calculation of EBIT and EPS. This is a 12 marks problem. You can easily gain 12 marks in the financial management. So thank you for watching my video guys. Please like, share, comment and subscribe to my YouTube channel.